Fusion Mobile, quality e-learning experience on the go.
Credit. Credit occurs when a seller grants permission to a buyer to take possession and enjoy a commodity with a promise to pay in the future. The credit worthiness of a buyer must be taken into consideration before granting credit so that it will not lead to bad debt. This can be obtained through the Status Enquiry Agency. Before granting credit, there must be a contractual agreement between the seller and buyer. The use of credit in transactions has increased tremendously in recent times. Despite shortcomings, credit system of transactions has played prominent roles in facilitating trading activities. Basis for credit sales includes 1. The income of the buyer, the source of payment, the integrity of the person, the availability of guarantors, the present employment, the time of payment. These are some of the things you have to consider before you grant credit to a customer. Advantages of credit sales are 1. Increase in sales. Credit sales can lead to increase in sale of goods. It also leads to increase in profit as higher prices are charged for credit transaction. Credit sale reduces the problem of stock being tied down or being held for too long, as goods can become outdated or become expired. Credit sales also leads to enjoyment of goods without payment by customers. Credit sales can increase the standard of living of people, as buyers can buy goods they never thought they could afford to buy, for example, cars. Credit sale can also serve as a means of meeting temporary needs for cash, because the individual can buy on credit and use the cash for other things. Credit can also encourage bulk purchase. Disadvantages of credit sales. 1. Credit sales can lead to increase in the price of goods for the customer buying goods on credit. Credit sale can cause the customer to overbuy more than what they can afford. The seller has the right to repossess the product if the last installment is not paid. Credit sale involves a lot of record keeping, as both cash and sales record must be kept. Credit sales can lead to bad debt, whereby some debts cannot be recovered. The working capital can be tied down and eventually eroded, which can lead to a close in business. There is always the problem of non-payment by buyers in credit sales. Too much credit transactions can lead to the liquidation of an organization. For example, the National Bank of Nigeria, before its resuscitation in 2000, business can be liquidated because of credit sales. There are different types and sources of credit. They include the mortgage, the loan and overdraft, the hire purchase, the deferred payment, the credit card, the debt factoring, the hiring and leasing, the club trading, the budget account, the monthly account, the conditional credit sales, the book me down credit, the trading check or voucher. Mortgage is a system of credit in which building societies or mortgage banks assist people to buy landed property or houses by lending them a proportion of the purchase money. The building or property will be used as collateral security, while interest will be paid by the borrower. The lender is known as the mortgagee, while the borrower is known as the mortgagor. Loan and overdraft. Loan is a sum of money borrowed by individuals, firms, and government from financial institutions or individuals for a particular period at an agreed rate of interest. Through this means, a sum of money is lent out to customers for a specific period at an agreed interest rate. On the other hand, an overdraft is a form of credit provided by banks in which a customer is allowed to draw over and above the money in his account. It is a method of credit facility in which a customer is allowed or permitted to draw a check greater than the amount of money in his credit. Interest will be paid on the overdraft. The hire purchase. The hire purchase is a system whereby the buyer or hirer has possession and the use of the goods, while the owner retains the ownership of goods until the final payment has been made. It is a system of installmental payment which is used for purchasing durable goods. After the final payment, ownership will pass to the buyer. If the buyer defaults, the seller can repossess the goods. Hire purchase agreement must be evidenced in writing and signed by the parties involved. Deferred payment. Deferred payment is a system whereby ownership and possession are transferred immediately to the buyer from the seller after paying an initial deposit. Payment for balance will be paid later. The seller cannot repossess the goods if the buyer defaults in payment. He can only reclaim them through court action. Similarities between the hire purchase and deferred payment is that both system of credit ensures that the buyer takes possession of the goods. Both accommodate installmental payments and credit facilities. The hirer or buyer can use and enjoy the goods. Durable goods are involved. Initial deposit is required in both systems. The credit card. The credit card is a card issued by some large stores to approved applicants, which enables a holder to obtain goods and services on credit at specified suppliers up to an agreed amount. The holder has a borrowing limit. It is advantageous in the sense that it economizes the use of cash. For example, the value card, the smart card, the euro card. This is common in advanced countries like Britain and America. Debt factoring. Debt factoring is a system whereby trade debts can be sold immediately for cash to factoring firms or banks for a lower amount than the actual value of the debt. The factoring firm, after purchasing the debts, will then collect them as its own. The firm will, by arrangement, purchase the trade debt of its clients and collect them on its behalf. Hiring and leasing. Hiring and leasing is a system whereby the owner of property grants to another the right to exclusive possession for a fixed time in return for periodic payment. For example, the leasing of equipment, houses, etc. Club trading. Club trading is a system of credit whereby some organizations set up clubs to collect regular contribution from members. This contribution can be withdrawn periodically in order to make purchases at the shops. Budget account. Budget account is a system operated by departmental stores whereby a customer agrees to pay a certain sum per month, which enables credit up to 8 times that amount to be obtained. This is common in advanced countries and among high-income earners. The customer will pay service charge on all goods bought. The main problem with this type of credit is that choice of goods will be restricted to a single shop. Then the monthly account. In this type of credit, large departmental stores open an account for the customer, which enables them to buy goods on credit. At the end of the month, the customer is sent a statement showing details of all goods bought. This will ensure monthly payment instead of paying for individual transactions. We also have the conditional credit sales. The conditional credit sales is an agreement for the sale of goods and not higher in which title to goods does not pass absolutely until all instrumentals have been paid. The buyer is unable to transfer a good title to an innocent purchaser. The seller has the right to take the title under specified condition. It has to be witnessed by somebody. Book me down. Book me down is common within the low-income earners in underdeveloped countries. The customer will purchase goods on credit and their names are written down. Payment may be made at the end of the month after receiving their remuneration from their places of work, that is, after receiving their salaries from their places of work. We also have the trading check or voucher. In this system of credit, a voucher is issued by a club which is formed to enable its members buy from specified local shops in the locality. This provides alternative to higher purchase. A percentage charge will be made with the actual amount paid over a certain week at an agreed rate. We have credit instruments. Credit instruments are written documents or agreements as evidence of repayment in credit transactions. They are numerous and cover a variety of ways in which credits are extended. They include the bill of exchange, the promissory note, the letter of credit, the credit cards, the debentures, the trading check, the vouchers, the hire purchase contract, the bonds, the IOU, the mortgage agreement, the lease agreement, the bank draft. The finance house. Finance house is a major source of financing credit transactions, for example, hire purchase. They mobilize funds from the public which attract high rate of interest or by borrowing from banks.